Uh, Before going to the today's topic, actually, as I mentioned in the last class, I couldn't complete the India slides, so we had to complete 10 more slides, I think. So first we will discuss on that matter, and then we will move to the new topic today. Okay. Before going to that, if you all have any question, you all can ask. This is as usual practice. If you'll have any question, you can unmute the microphone and ask the question. So otherwise, you can send the questions through the chat box. Then I can answer. Or if you'll have any comment, even I can give the appropriate answer. Yeah, one of the students say the good morning. Yeah, actually, good morning, everyone. So if you all don't have any questions, then I'll just move to the balance slides. So the last class we have discussed about the licensing procedure for especially the licensed banks as well as licensed finance companies and insurance companies. And one more thing, specialized leasing company. So 4 category of business entities or finance entities we have seen. So today we have to cover some other institution which are related to the capital market transaction or capital market activities. Accordingly, we have to see the stockbrokers, stock dealers, and stock exchange and unit trust management companies, licensing procedure, and governance structure. Governance structure in the sense which type of act prevail for the under these licensing procedures. So first of all, the licensing, the Securities and Exchange Commission grants license to any person to carry on the business of a stockbroker or stock dealer and any body corporate to carry on the business of stock exchange for specified period. Of course, you all may have heard about the stockbrokers and stock dealers very frequently, even the stock exchange. You may get wonder that why the stock exchange also are licensed by the Securities Exchange Commission, whether it is it that happening? Actually, the Columbus Stock Exchange is a sort of is an entity formed by all the stockbrokers, and that institution also, the Columbus Stock Exchange also governed by or licensed by Securities and Exchange Commission. Actually, Securities and Exchange Commission is the regulator. So those are the SEC. Those people are granting license to stock exchange. Okay, let's assume that if our economy is growing and most of the companies and institutional corporates are getting listed, and then if they feel that okay, the Columbus Stock Exchange is not enough, so we can have a sort of regional stock exchange like some other countries, then this SEC can grant the license to open a regional stock exchange. If you take in the India, there are 2 stock exchange mainly. The first one is National Stock Exchange. Other one is Mumbai Stock Exchange. Okay. Likewise, in Sri Lanka also, if SEC willing or if SEC decide that it's appropriate to create the license for another stock exchange, they can grant the license. And the stockbrokers, of course, everybody knows that those who are dealing with the on behalf of the customers or on behalf of the investors, they are buying and selling the stock. And the stock dealers, they are buying and selling. It's not on behalf of the customer. Actually, they themselves are doing the stock purchasing, selling, and underwriting and everything. And no corporates or individual shall use the word stockbroker, stock dealer, or stock exchange unless such body, corporate, or individual has been licensed as a stockbroker, stock dealer, or stock exchange by the SEC under the SEC Act. In the SEC Act, as a practical, you may heard about that. They are proposing some new, or they are working on to bring the new act, or working to amend the present act to prevail the current scenario. So but anyhow, the prevailing SEC act will give a power to the SEC to grant the license to these type of institutions. Understand? So there are three type of institutions mainly given licensing. Other than these three, there are some other institutions also obtaining license from the Columbus Stock, the Securities and Exchange Commission. We'll see about it later on. So as I mentioned, the stockbroker, everybody knows that it's a stockbroker, any individual or body corporate engage in the business of buying and selling of securities on behalf of investors in return for a commission. There's a prescribed commission. So that commission, that commission on behalf of the investor, if I wanted to buy the shares at a Columbus Stock Exchange, I can't directly buy. Actually, I have to go through the stockbroker. So when I am buying that shares from the Columbus Stock Exchange through the stockbroker, so I have to give certain commission to the particular stockbroker as well. And then there's a sort of other institution called stock dealer, or any individual or body corporate engage in business of buying and selling of securities, or in the dealing or trading of securities, or underwriting or relating securities, but shall not include an underwriter, called as a stock dealer. So actually there's a rare questions in our FIM, finance institution management. There is no I haven't seen any questions related to this in the past paper, but in the central banking paper, this question is very frequency, especially as a part of the question one. They are always asking a question that the difference between the stockbroker and stock dealer, or they are in the short notes also they are asking the stockbroker versus stock dealer. So if you sit the exam for central banking subject, then it's useful. But better you are just understanding that the difference between the stockbroker and stock dealer. Then finally, SEC has specified terms and conditions to be complied with by the company individual wishes to be a stockbroker, stock dealer. Actually, if you go to the SEC website, you can see there are directions and circulars and guidelines and all, which has to be complied by these stockbrokers and stock dealers. That's all about the stockbrokers and stock dealers. And now we are going to the other sort of licensing process of other institution called Unit Trust Management Company. Before moving to that, if you will have any question, you can ask. You will have any questions related to this stockbroker, the licensing on? Actually, the very straightforward. So I just moving to the other section, the Unit Trust Management Companies. There are two things actually you'll have to keep in mind. First one is unit trust, other one is unit trust management companies. Unit trust is sort of fund which is operated by unit trust management companies. Okay, the unit trust management companies in the sense the companies which are managing the unit trust. We'll see that a company, a managing company intending to operate a unit trust shall obtain the license from Securities and Exchange Commission to operate such unit trust. Okay, so if I have an intention to operate operate a unit trust, then I have to obtain a license from the Securities and Exchange Commission to run the unit trust. A person shall use the word, no person shall use the word unit trust unless he has obtained license to operate a unit trust. So in Sri Lanka, there are, I think, 42 or nearly 40 unit trusts are there. and all sort of 40 dots unit trusts are managed by I think 11 or 12 companies. I'm not exactly knowing the number, but as per my if you see the central bank web's annual report, chapter 8, which discuss about the performance of unit trust management companies. So you can read, if you want further information, you can read and get the information. No person shall issue or publish, to be issued or published, an explanatory memorandum or advertisement inviting the public to invest in units of a unit trust unless such person is the unit trust management company and has obtained pre-approval of the SEC for the contents for the contents or issue of the publication. So accordingly, like a licensed bank or licensed specialized licensed bank or finance companies or leasing company, here also they can't use the word unit trust unless without getting a license from the SEC. Same wise, they can't they can publish the sort of advertisement to mobilize or the unit to sell the unit trust or invite the investors to invest in the units. So under that scenario also, they have to get the permission from the SEC, or without SEC permission they can't publish to invite the investors to invest in the unit trust. In the unit trust, of course, there are mainly there are two kind of unit trust. First one is open-ended fund. The second one is closed-ended fund. These type of things are giving some additional knowledge to you all. Even you are not as a banker or not for the exam, or not only for to sit the exam, in your day-to-day life, this type of information will give you an additional benefits to manage your financial needs. Actually, in our country, the financial literacy is in a very low level. Financial literacy in the sense to manage their financials. So this type of information we may give an additional information. So accordingly, the unit trust can be categorized into two categories: open-ended funds and closed-ended funds. The open-ended fund means investor can enter and exit any time. So there is no any restriction, but there may be some fees get involved when they are entering into the unit trust. They may say that, okay, when you are buying, you have to give this much of commission. So there may be fees, but the investors can enter and exit at any time. No restriction of the number of units to be issued, and fund has no maturity. Actually, this is other feature of this open-ended fund unit trust. There any investor can enter and exit anytime. That's first one. And second one is no restriction of the units, number of units to be issued, and fund has no maturity. In the sense, it will the particular unit trust fund will function continuously without ending. For example, if a unit trust, if a particular unit trust which is investing in the stock, then that unit trust will continue. If it is a open-ended fund, then they will continue as a for a longer period without any maturity. And units are sold to or purchased from the fund management company. If you see this daily FT or something, you can see that in the second page there are unit trust funds, buying and selling prices are involved. So for that particular price, you can if you have the unit trust, you can sell it and exit, or if you wanted to enter into the unit trust, you can purchase and enter into the particular particular fund. So these are the open-ended fund. Open-ended fund means, just keep in mind, at any time the investor can enter and exit. and there is no maturity. And closed-ended fund, that is the flip side of this coin. It means the opposite, reverse. The closed-ended fund means fund has a maturity date. There's a particular maturity. So at that time, the fund will get wind up. And fund management company keep the fund open for a specified period for subscription and close. So, for example, if they are if they wanted to, they are going to start funding or large infrastructure project or something. Okay, there's a funding arrangement. So they are just for the funding purpose. They open a unit trust fund and they just keep it open for subscription, and then after that they will close, and up to that project period, that fund will be there, and end of the project period, fund will get matured. And subscribers cannot exit before maturity unless the unit are listed or arranged is in place. Understand? So this is sort of the reverse side of the open-ended fund. Closed-ended fund has a maturity, and they can't they can't sell the exit. They can't exit. Generally, they can't exit unless it is listed, and they are specified as initially they will open for subscription and then they will close it. Okay. And there are different type of funds. If you see the unit trust funds, you'll can see that gilt edge funds and high yield funds and growth fund, as well as balance fund and money market funds. There are different features. Each fund has a different features. They are so mainly these features are described based on the risk level and based on the return. Most probably based on the risk. For example, if it is a gilt edge fund, the investments only the particular fund, they make the investment only in the government securities. The government securities in the sense treasury bills, treasury bond, repurchase agreements, the repos, those type of only those three type of investments they are making. So risk is relatively low. Okay, and the return is usually lower than the return from bank deposits, because the risk is low, then return also low. Okay, I'm going to ask you all a question. Since you all are not asking the question from me, I'm thinking to ask a question from you. Here we are saying that this gilt edge fund is they are making the investment only in the government securities. Okay, if it is the government securities, the risk is normally, our perception is the zero. Okay, we are saying that, okay, I just recently met a fund manager. When he's telling that we are making the investment in the government securities, so zero risk. But actually, it's a myth. We can't say that that's a zero risk. That's why here I use the word, the risk is relatively low or close to zero. But there's a small portion of risk get involved even in the investment in government securities. What sort of investment can occur in the investment of government securities? Can someone answer? Did you get the question? We are saying that when we are investing in government securities, risk is zero. But I am saying that is a myth. That is not a 100% correct statement. Actually, there are some risks get involved when we are investing in the government securities as well. Okay. The now question is, what sort of risk can be related to the related to the investment in government securities? What is the answer? You can unmute the mic and answer. or you can type through the chat box. Come on, as a financial students, you'll may the answer. You'll may know the answer. We can't say that zero risk in the investment of government securities. That is a direct question. Why? Oh, are you saying that there's a zero risk in the government investment in government securities, which is your stance? Whether you are saying that there's a zero risk, or you are saying no, there are some risk also involved. What is your answer, or what is your opinion?
I think it's a zero risk, sir.
Sorry?
I think there is no risk.
Actually, not exactly, because when you are saying the no risk, if the credit risk is or default risk is zero, but there are interest rate risk, which we will study later on in the risk management section. So, for example, if you are keeping in the invest in the government securities and keep that fund or particular investment in the trading book, then you have to market those investment on daily basis or weekly basis, at least monthly basis. In that scenario, that particular investment is subject to the interest rate risk. So in that circumstances, actually the government securities are, the investment in government securities are subject to certain level of risk, which may be close to zero, but not zero. That is one thing. Another thing is, not in Sri Lanka, but in some other countries like Argentina and Latin American countries, these government default their debt. In that circumstances, the government will announce. In Argentina, I think some Latin American countries, they announce that, okay, we will give only 70% of our debt to the investors. Mostly they will just say to the foreign investors. But in some cases, there were instances, government say that for the local, their local currency investments also, they said that the debt also, they said that no, we will pay only certain amount. There will be a sort of haircut. They may once they in 60% or 70% or based on that. So in that case also, it is an extreme case, but in that case also, there's the risk level get involved. So we can't say when we are investing in the government securities, which is the 0% risk. There is a small portion of risk get involved with the investment in the government securities as well. That's why I have mentioned you that risk is relatively low, not the zero. Okay? If you will have any different opinion, even you can make your comment. I'm ready to accept it. If you'll have anything, you can make. Or otherwise, I'll just move to the other one. Okay. Then other one is the high yield funds. High yield or high income funds, which is invest in the fixed income securities that provide much higher return than the deposits or treasury bills. The majority of high yield corporate debt securities also in treasury bills, bank deposit and repos. Generally, these funds are sort of fixed income funds. What they will do is they will concentrate, or they will concentrate their investment in the corporate debenture markets. So in the corporate debenture market also, you can see that if it is a highly rated corporate debentures, for example, AAA or AA rated corporate debentures, then rate is sort of low. Low in the sense, even though it is higher than the treasury bill and deposit rates, but compared to some other commercial papers and all, and it is somewhat low. But if you invest in the corporate debenture which is rated into, for example, triple B or less than triple B corporate debts, then those investments give high returns. So some funds, they are targeting the high returns, so they are ready to take that risk as well. Okay, so they may invest in those corporate debentures, and also for liquidity purpose, they will keep some portion into treasury bill and bank deposits, but most of the investment will be in the corporate debt debentures, even the high yield corporate debt debentures, which is lower graded corporate debt securities. Okay, so that is the second category of the fund, unit trust fund. And third one is growth funds. The objective is to provide the capital appreciation. They won't give sort of profit or profit sharing. The objective is capital appreciation. Major part of investment in equities with smaller portion in fixed income securities. Risk is higher and may not get a regular return. Investor can exit with return up to such point if he wishes. So in the growth fund is sort of capital appreciation. It is sort of long-term fund, and then they invest in the equities, and the return is not regular return. Their main objective is providing capital appreciation. Okay, that is called the growth funds. Okay, by for your knowledge, just because these are some even I have sort of experiences, and I have gone through several literature. This is just for your knowledge. Okay, I'm asking you. This is you are having some personal fund. Okay, you are having 10 million personal fund. Okay, you are at the age of 25. Okay, that is scenario 1. You have the 10 million worth of fund. You are at the age of 25. Okay, in that scenario, which investment you will prefer or you will select, whether equity or fixed income fund? This is scenario 1. Scenario 1, you are having 10 million fund. You are your age is 25. Whether you will select the equity or fixed deposit or treasury bonds or corporate debenture or treasury bond. Let's take the treasury bonds or equities. Your age is 25. The scenario 2, you have the same 10 million fund, but your age is 50. So you have the option of invest in the equity and invest in the treasury bonds. Okay, in these two scenarios, what will be your preference? Under scenario 1, at the age of 25, what is your preference, whether equity or treasury bond? At the age of 50, what will be your selection, whether equity or treasury bond? Can someone make it? Because I just wanted to teach you some intuition of this investment time. Yeah, actually, they say that equity in the sense, actually that student doesn't mention the age or option 1 or okay, equity for scenario 1. Exactly. Actually, that is the one. When you are investing in equity, you have to target for a long term. Okay, because in the long run, equity will give a higher return. Even in not only Sri Lanka, even in India or US or even UK or any global stock market, that is a general theory. When you are investing in the stock market, you have to invest with a long-term view. Yeah, that's what the Warren Buffett saying, that when you are investing in the equity, you are just you have to think that, okay, I am buying part of the particular company. With that mindset, you have to invest in the equity. You have to select the equity with enough analysis. But if you have a shorter period, then better you have to invest in the fixed income securities. Because if it is a shorter period, equity may have more fluctuation. Okay, so you are having a retirement age of 60, you are at the 50, so don't take the risk to invest in the equities. Better to settle with the government, the fixed income securities. But you are at the age of 25 and you have the long run to play, and you can take the enough risk because there's a long period to retire. You have another 35 years. So in that case, the best option will be equity investments. So actually, when as even you are a student, it may helpful for you all to in the work as well as your personal life. When you are doing the things, you have to take the decision based on these some generally accepted theories or empirical conclusions. Okay, this is just for a just additional knowledge. Okay, there's other fund is the balance fund. Balance fund is object is provide the regular return with the capital appreciation in the long and medium term. So the balance fund is okay, providing regular return as well as capital appreciation. So mostly they will invest part in the government securities or debentures or fixed income securities, and part they will invest in the equities. And money market fund, of course, these days, which is more popular in Sri Lanka, especially under low interest rate scenarios, these money market funds are getting growing. If you see every year, the new funds, 1 or 2 new funds are coming. And most of the investment size also getting bigger because people are people are willing to invest in the money market fund due to the low interest rate prevail in the banking sector. So invest in the short-term fixed income securities like treasury bill deposits and commercial papers repos. Even though treasury bill and deposits, most of the investments are going to the commercial papers and repos. Suitable to invest temporary excess funds. So this is money market funds. So these are the mainly these are the type of funds: gilt edge funds and high yield funds, as well as growth funds and balance fund and money market funds. So this is the investor preference to select, okay, which type of funds he is going to select. It is depend on the size of risk or risk appetite of the particular investor and his expected return. Both factors will influence of selecting the funds. Okay. Okay, before going to the cooperative societies, I'll like to give an opportunity to you all to ask the question. If you all have any question, you all can ask. Come on, students, you can ask the question. Don't have the hesitation. Any question you all can ask from me. If you all can, just unmute and ask. Otherwise, you all can just send the question through the chat box. Okay, since you all don't have much questions, and then I'll just move into the cooperative licensing of cooperative societies. This is very small section, and just to complete the section, I have included 2 slides, 1 slides to just give it some sort of flavor on the cooperative societies. Only 1 slide. There are three type of cooperative societies considered as a financial institution or semi-financial institutions. One is cooperative rural banks and theft and cooperative credit cooperative societies and other financing societies. Initially, these societies has to register under the Cooperative Societies Act number 5 of 1972. Then these institutions are regulated by Cooperative Development Commissioner or Provincial Cooperative Development Commissioner under the applicable licensing, auditing and issuing regulations. So under the Cooperative Act, you can start the bank, the rural bank, and it is subject to the regulation by or regulated by Cooperative Development Commissioner. And main business accept the deposit from members and the public. Mainly they are accepting deposit from the members, lending to members and investing the excess funds. These three type of business they are getting involved. So I just include one slide just to complete the this topic. There's no much on these cooperative societies licensing and all. So that's all about. If you all have any questions, so I can just what I can do is under the licensing, I just summarize this. This is you can see in the new tools. I summarize this our licensing procedures. First, we have seen about the licensed commercial banks licensing, which main business of it accepting deposits from the general public, but they can accept current deposit or demand deposit. That is the remarkable difference between the commercial bank and specialized bank. They can have the current account. They can open the mobilize the deposit through the current account. Now, what is the current account? Which has the check transaction. And grant the loans and advances, conduct all foreign currency transactions. Oh, this is another main feature. This licensed commercial bank having the right to conduct a foreign currency transaction or mobilize the foreign currency deposits, and they can grant the loans in the foreign currency transaction. Okay, here I am going to ask a general question from you. As I mentioned here, only the licensed commercial banks can involve the foreign currency transaction in their day-to-day business. But as an exceptional, there is a specialized bank which also granted the permission to engage a foreign currency transaction, into foreign currency transaction into their day-to-day operation. What is that bank? It is a specialized bank, but Central Bank of Sri Lanka specially grant the approval to particular bank to engage in the foreign currency transaction. Other than that, only foreign licensed commercial bank can get involved with the foreign currency transaction. What is that? The special approval bank. Can anyone? Yeah, exactly. That is NSP, which is the where NSP has been granted. Sorry, NSP has been granted a special approval to conduct a foreign currency transaction. Other than NSPs, only licensed commercial bank can conduct the foreign currency transaction. And we have studied about the licensing, issuing, regulations, and supervision. So main regulator is Central Bank of Sri Lanka and Director Bank Supervision Department. Under this table is just summarizing you. And licensed specialized bank again accepting deposits, but other than the demand deposit, lending, investing, provide other permitted financial services according to the Annex 4 of Banking Act. Okay. And then we have seen about the licensed finance companies. They also can accept the deposit excluding the current account, lending and investing. And this main regulator, central bank and monetary board, director non-bank supervision under the Banking Business Finance Business Act number 42 of 2011. So licensing, issuing, regulations and everything is coming under the central bank. And specialized leasing companies which raising the fund through the share capital and borrowing and engaging in finance leasing business. So they are coming under the Finance Leasing Act number 56 of 2000 as amended several times. And they are regulators also, Director Non-Bank Supervision and Central Bank of Sri Lanka on Monetary Board. Okay, then licensed microfinance companies, which we have, I have told you, but I haven't included anything in the slides. So they also can accept and provide the financial accommodation and other financial services mainly to low-income person and micro enterprises. So these licensed microfinance companies, I have told you the last class, there are 3 or 4 licenses have been granted to, or license have been granted to 3 or 4 institutions, and accordingly they have the sort of mandate to engage with the low income persons and accepting deposit and providing financial accommodations. And again, the regulator is Director Non-Bank Supervision under the Microfinance Act, number 6 of 2016. So primary dealer, this is primary dealers for government securities. They can buy the government securities from the primary auction. Actually, what is the primary auction? The central bank sell their securities, the treasury bills and treasury bonds, the place where central bank sell their government, the treasury bill and treasury bond on behalf of the government. Where these primary dealers can only participate in the primary auctions. For example, if I wanted to buy a treasury bill, I can't buy it from directly from the primary auction. I have to buy from a primary dealers. Normally, licensed commercial bank, most of the licensed commercial bank, again, underline the word, most of the licensed commercial bank, not all. Most of the licensed commercial banks are having license, the primary dealer license. And there are, I think, 4 or 5 standalone primary dealers are available. So you can get these names in the central bank website. So they can their main business is buying this government securities at the primary auction and trading such securities in the secondary market. Secondary market is the primary dealers selling the securities to the investors. Then CBSL and Superintendent of Public Debt as well as Department of Director Non-Bank Supervision become the regulators, and they are regulating under the Registered Stock and Securities Ordinance and Local Treasury Bill Ordinance. There are 2 ordinances, and licensing, issuing, regulations and supervision. I think you will be know about this because not now, sometimes back it was a sort of very discussing topic about these primary dealers, and there are some issues. You will know that. And cooperative rural bank, accepting deposit from the members and general public, lending to members and investing excess funds. And Cooperative Development Commission or provincial Cooperative Development Commission as the regulator, and licensing, auditing and issuing regulations are coming under the main regulator. And stockbroker dealers provide respective services. It means on behalf of the investor, buying the shares and selling the shares. And Securities Exchange Commission will be the main regulator under the Securities Exchange Commission Act number 36 of 1987 amended several. and licensing issuing the regulations. So unit trust, of course, we have seen today. So I just skip. And insurance corporate insurance companies and insurance brokers accepted premium in return of providing insurance to the customers. Insurance Regulatory Commission of Sri Lanka will be the regulator under the Act number 43 of 2000. 2000 as amended several times, and licensing, issuing, and supervision will be their main. So before going to the winding up section, the new section, liquidation and winding up, I just wanted so far I think it's sort of very lengthy time, maybe 1.5 class. We have discussed about licensing process of the finance institution. If you have any question, you can ask. I can answer. Any questions? So as usual, shall I ask the question? If you don't have the question. So I hope that since you all don't have the questions, so you can answer the all the questions. There's no doubt. Okay. Okay. Since you all don't have the questions, I'll move to the today's topic, which is about winding up provisions of the Companies Act. So if you see the our class structure, our first class, we have discussed about the incorporation of companies, and there are related process and related act provisions and all we have seen. Then we have incorporation of the company of a company. We have seen about it, and relevant provisions related to act, the shareholders' rights and company directors' duties and everything. And then we have discussed about the last class and today's class. The first part we have discussed about the licensing procedure for financial institutions. Now we are going to discuss about the winding up provision of a Companies Act, and then liquidation of sort of winding up of the then we will just see about the winding up of a financial institutions. Okay, so this is again act provisions, so there is much to explain to you all. I just telling you all, if you have any question, you can ask. Okay, the winding up. What is the meaning of winding up? Paying of all liabilities through a legal procedure under the Companies Act is called as a winding up. It means they are just finishing or coming to the end of a company existence of a company. So before coming to end of a existence of a company, they have to paying off all the liabilities through a legal procedure under the Companies Act, which is called winding up procedures. So winding up can be either under three circumstances, a winding up can be happen. The first one is by the court. So court will order to wind up a particular company. The second one is voluntary winding up. The third one is subject to the provision of the court. So there are three types of winding up is mentioned in the Companies Act. So if you see the winding up by the court, the first section, we have seen the by court and voluntary and subject to the provision of the court. So now we are going to discuss in detail manner winding up by the court. So the first circumstances, a company has by special resolution resolved such winding up. Okay, so company itself passing a special resolution, it can go for a winding up, and that winding up may be called as a, sorry, not maybe, that such winding up called as a winding up by court. Okay, here I am asking a question. You will have any question? So shall I ask a question? You just to get the feedback. Okay. If there is a special resolution, okay, what type of majority is necessary to pass a special resolution? Okay, we have discussed about the resolution, different resolution. We have discussed about the different resolution under the director's powers and duties. And I think shareholders' powers and duties as well. Sorry, shareholders' powers and duties. We have discussed about the normal resolution and special resolution. Okay. Now I am asking a question. Here we are saying that company has by special resolution resolved such winding up. It called as a winding up by court. Okay. These circumstances. Okay. So now I am asking a question. What sort of majority is necessary to pass special resolution? Come on, students. I just asked a question. What sort of majority? What type of majority is necessary? Yeah, exactly. 75% of the majority is necessary to pass the special resolution. If it is a normal resolution, only 50%, more than just above the 50%. Okay. So first circumstances is company has passed by special resolution resolve such winding up under the winding up by the court. And the second one is company does not commence business with a year from its incorporation or suspend the business for 1 year, then they have to go for a winding up by the court. Okay, so for example, we have discussed that the company, once they incorporated, the incorporation of the company incorporation certificate will be issued to the particular company. But within a period, 1 year period, the company does not commence its businesses from its incorporation or suspend the business for a 1 year period, then the company has to go for a winding up by court. And third one is number of shareholders falls below the required level. So if it is below the required level, then they have to go for a court. And the company has no directors. All the directors have resigned from the companies. In that circumstances, company has to go for a court winding up. And company is unable to pay its debt. Okay, so that also will consider as a winding up by the court. In that circumstances also, that will lead to the winding up by the court. And the court is of the opinion that it is just an equitable to wound up. Okay, so in that circumstances, they will go for a the winding up by the court. Here, it's we have here discussed that company is unable to pay its debt. I have mentioned here. Okay, here I am giving some extra information about what is the circumstances of a company inability to pay debt. The first one is a creditor to whom the company is indebted to a sum exceeding 50,000 has served a request at a registered office of a company, a demand to repay such debt, and for 3 weeks the company has not able to make that payment. In that circumstances, it will considered as a company inability to pay debt. Have you got the point? It means a direct a creditor the company is indebted more than 50,000. For example, a creditor who gave the more than 50,000 to the company, he demand that money to repay. But for within 3 weeks period, company could not able to meet the demand or to repay that 50,000. In that circumstances, it will considered as a inability to pay debt by the company. Okay, so if there's any questions how we consider the inability to pay the debt by a company, then you have to write this first one. Inability to meet an execution or other process issued on judgment degree or order by the court in favor of the creditor of the company. For example, in favor of the creditor, a court issued a judgment. But in that case, even company could not inability to meet that judgment, then in that circumstance also it will consider it as a inability to pay debt. The court is satisfied that company is unable to pay its debt, taking into account all liabilities, including any contingent and prospective liabilities of the company. So, company satisfied that company is unable to pay its debt, then it will consider all its liability into the consideration. And presenting an application to the court. So application to wind up shall be petitioned by the company or creditor or creditors. And it can be that petition can be application can be filed by one of these above people or everybody together. There can be all or any of the above parties jointly or separately can file the application presenting to wind up. Actually, students, these are very straightforward and act related to the act. So what I'm also thinking to finish this company act related things with this class and start the new topic, the risk management or corporate governance in the next class. I'm just quickly run through this. I'm going to run through the rest of the slides. So if you'll have any question, you can at any time just stop me and ask the questions, or you can send the message. I'll time to time and check my inbox, and if there's any question, I'll answer. Okay. Otherwise, if I take more time, then it may and then I have to. It will track on to next class also. So I like to start the next class with a fresh topic, either risk management or corporate governance. Okay, so if you have any question, you can just ask. Yeah, there's a question that by code in the sense after 1 year non-operation of a yes. Actually, there are two circumstances. The first one is, if you see that, if you see that the company does not commence business within a year. So after 1 year, what will happen is it will create a circumstances binding up by the court, or suspend the business for 1 year. For 1 year period, if they suspend and they could not function the business, run the business, then after 1 year, they will go for a binding. Okay, so this is basically the after 1 year, they will, if they could not commence their business from the date of incorporation. How can we decide the date of incorporation? The incorporation certificate, company registered, put the date, mention the date, the date which that particular company has been incorporated. So from that date to 1 year, if the company does not function or commence its business, then after 1 year, it will go for a winding up by court. Okay? Got the point? Yeah, there's another question. Although cooperative banks are accepting deposit from public, it is not regulated by the CBSL. Why is that? Actually, under the CBSL, there are two institutions mainly, or three institutions mainly accepting the deposits. First one is this licensed bank. Second one is licensed finance companies. Other one is microfinance companies. Okay. But this rural bank, of course, which is governed by separate act, not coming under the Banking Act or Finance Business Act or anything. And other thing is, so the central bank does not have the power to supervise that, first thing. And other one is, when you are seeing that systemically important banks or systemically important financial institutions, if you see that the commercial banks, licensed commercial banks and licensed specialized banks are having more than 60% of the financial system. This banking industry represents more than 60% of the financial system in terms of total assets. And again, licensed finance companies nearly 7 to 8% total assets. But these rural banks, of course, not that much. Their market share is, I think, in the financial system, it is less than 3%. I think 2.8 or 3%. So systemically, actually, when we are doing the regulations, we have to see the systemically importance of that particular financial institutions. So, and it is not, one is they don't have the mandate because the act is different. Other one is whether it is worth to supervise by the central bank, because their market share is way less than the 3% or the close to 3% of the financing system. So that's why it is coming under the separate institution, and it is again they are mainly collect the deposit from the members, but they can collect the information from the public as well. But main thing is members. That is the reason. Are you satisfied with the answer? Okay. Then these slides we stop that. And consequences of a winding up order. On making the winding up order, a copy of the order should be forwarded by the company or as prescribed to the Registrar General of Companies. So by the company, it has to forward it to the Registrar of Companies about the winding up order. And once such order is made on made no action or proceeding shall be proceeds with or comments against the company except with the permission of the court and subject to such term that court may impose. Okay. And again, third one is a winding up order shall operate in favor of all creditors of the company as if a joint petition is made by all. So normally the winding up of the order shall operate in favor of all the creditors of the company as if a joint petition is made. Even though it is made by a single creditor, it will winding up shall be operate in favor of all the creditors. And then there is other one is liquidator. Okay, once the winding up order is given, then there's a person or company called liquidator is coming to the scene. They are the people, the person who is in charge to the winding up process. So the court may appoint a liquidator or liquidators for the purpose of conducting the proceeding in winding a company and performing the necessary duty with respect to serve. So in order to carry out the proceeding of winding up proceeding, the court may appoint a liquidator. The court may appoint a liquidator provisionally at any time after an application for winding up is presented and before the winding up order is made. Even winding up order is made, the court can appoint a liquidator provisionally. Provisional condition, they can appoint a liquidator. Once appointed, the liquidator shall take into his custody or under his control all the property and things in action in which the company is entitled. Okay, once the liquidator is appointed, then he will take into his custody all the properties and all of the particular company which the company is entitled. So then actually in the liquidation process, the liquidator will come in, winding up process, liquidator will coming up to the sort of as a main person who will carry out the proceeding of winding up. Powers of the liquidator. The liquidator has certain powers are given to the liquidator to bring or defend any action or other legal proceeding in the name and on behalf of the company. For example, in the liquidation process, okay, creditors may call the may claim their debt amounts, but the debtors may not or reluctant to pay their amounts or dues. So in that case, or in any other circumstances, if they wanted to go for a legal proceeding, then they can bring or defend any legal actions on behalf of the company. To carry on the business of the company, so far it is beneficial for the winding up of the company. For a winding up of the company, if it is beneficial, they can carry on the business of companies. Some companies, okay, they are some other reason they have decided to winding up, but still it is worth to carry on the business to certain extent. For example, if it is a production-based company, some of the productions or have a sizable number of the production on the working progress condition, so it is better to finish the production and sell it, so that is better to the beneficial of the winding up. So in that circumstances, he is given the power to carry on the business of the particular company, the winding, even though it is the court has ordered for the winding up. To appoint the attorney at law to assist him, because to handle this legal procedure and all, he can appoint the attorney at law to assist him. To pay any classes of creditors in full. To make any compromise or arrangement with creditors of persons claiming to be creditors or having or allegedly in themselves to have any claim, present or future, certain or contingent. So he can make the promise. And to sell the movable and immovable property and things in action of the company by public auction or private contract. So he has the power to sell the property of the company. To do all act and to execute in the name of and on behalf of the company all deed, receipt and other documents, and where necessary to use the seal of the company, he has the power. To prove, rank and claim the bankruptcy, solvency or sequestrations of any contributory or to receive the dividends, he has the power. There are so many so many powers are given. To draw, accept, the make and endorse by bills of exchange. It means bills of exchange, checks and all, the promissory notes or similar instrument in the same and on behalf of the company with the same effect as it was done by the company in course of its business. So he can draw or accept or make or endorse any bill of exchange. Bill of exchange in the sense, even the checks coming under the bill of exchange, or promissory notes or similar instrument in the same manner on behalf of the company with the same effect it was, even if it is done by the company. What would be the effect? With the same effect, he can draw, accept or make the endorsement of the bill. to raise any money required on the security of a company's assets, to appoint the agent to do any business on behalf of the liquidator, to do all such other things as may be necessary. So I think these are the powers given to the liquidator. There are the long list given here. So you'll just read it and get an understanding. If you have any question, you can ask, because I time to time check with the students whether they are having any questions. Then it is better. It is better to clear then and there rather than just discuss at the end of the session. I believe that it is always better to have a interactive sessions. Okay. Then we have seen 3 types of winding up. First one is winding up by the court. Second one is voluntary winding up. So here again, it mentioned that what are the circumstances which could lead to the voluntary winding up. First one is when the period of the company fixed by the article expires or the event occurs and article provide the company to dissolve and has passed a resolution at the general meeting. So, for example, some company, generally the companies are open as an artificial person. There is no any ending period for a company generally. But if some companies can incorporate it by a fixed term. In the article of association, it says that, okay, this company will function for 10-year period or for certain project. For example, there's a large road project is going on. For that purpose, they have created a separate company. Once the road project is over, based on the article of association, they can wind up the company. So, which is called voluntary winding up. So, it is in the article of association, it is mentioned on either period or some events occurs. But in my example, the event is completion of that road project. So, a particular event occurs, then the company can go for a voluntary winding. Resolved by the special resolution, voluntary winding up can be happen. So that is also one of the things, and resolved by the special resolution to the effect that it cannot by reason of its liabilities continues to business and that is advisable to wind up, then they can go for a voluntary winding up. So notice of resolution. So once the company passes a resolution to wind up voluntary, within 14 days from the passing of such resolution, it should give the notice of that such resolution by publishing in the Gazette. You can see in the Gazette or a paper advertisement, some companies are going for a voluntary winding up. The liquidator is deemed to be an officer of the company. So officer of the company deemed to be a liquidator. The voluntary liquidation is deemed to be commenced at the time of passing such resolution. So once the resolution passed, that time itself, the voluntary winding up will commence. The company shall, from the date of commencement of winding up, cease to carry on its business except to the extent required for a beneficial winding up of the company. Okay, so even though it's common, they can start to cease the businesses, except some businesses may be beneficial to wind up the company, so they can continue. Other than that, they have to stop the all other business activities. Declaration of solvency. Where a company is to be wound up voluntary, the majority of its directors may, at a meeting of the directors, make a statutory declaration to the effect that they have made a full inquiry into the affairs of the company and that they are of the opinion that company will able to pay its debt in full within such period not exceeding 12 months from the date of commencement of the winding up specified in the declaration. So actually for the voluntary winding up, the directors has to make sort of declaration where they have to say that we have fully inquiry into the affairs of the company and we are able to repay all the debts within 12 months. So that such declaration of solvency has to be made by the directors. Okay. So what is the meaning of solvency? We have discussed already. Let's just check. What is the meaning of solvency? Yeah, there's a question that can liquidator be a firm? Yes, of course. A firm can be a liquidator. Generally, normally the other than a person also, but generally the firm can be a liquidator. Okay, what is solvency? Or at which circumstances a company can be considered as a solvent? There are two terms, insolvency and solvency. What is the meaning of solvency? Ability to pay one's debt. Actually, that is the one. The solvency is ability to pay the debt. But if it is in the definition, you can say that the present value of the debt or present value of the assets is higher than the present value of the liability, then the particular company or particular institution will be considered as a solvent. So the insolvent means if a present value of the assets is not enough to repay the or to meet the present value of the liabilities, then that particular institution will be considered as an insolvent institution. Okay, that's what here it's called that declaration of solvency. The particular directors has to mention that within 12 months period, we have the ability to repay all the debts in full. So they have to make a declaration of solvency. The declaration is not valid unless it is made within 5 weeks immediately preceding the date of passing the resolution for voluntary winding up and is delivered to the Registrar General for registration by that date. So within 5 weeks, they have to make the solvency declaration. Otherwise, it is not valid. It includes a statement of the company's assets and liabilities as at the latest practicable date before making such declaration. The shareholders voluntary winding up, if a declaration is passed and delivered to the stated in the Companies Act. The creditors voluntary winding up, there are two winding up, shareholders voluntary winding up and creditors voluntary winding up. Then the third one is, we have seen the three category, winding up by court, voluntary winding up subject to court supervision. When a company has passed a resolution for voluntary winding up, but up the court may make the order that such winding up shall continue subject to the supervision of court. Even though it is a voluntary winding up, court may decide that it has to be carried out. That particular winding up has to be carried out with the supervision of the court. That will be considered as a winding up subject to the court supervision. That is, these all about the provisions related to the winding up of a company in the Companies Act. Now we are going to move into the liquidation of the financial institution, especially licensed bank and licensed finance companies, there are special provision for them or some additional requirement for them to liquidation of a licensed bank. Okay, and specialized companies as well. So before moving to that, if you have any questions, you can ask. If you have any questions, you can ask. Otherwise, I'll just start the liquidation of a licensed bank. Okay, since there is no questions, I just move into the liquidation of a licensed bank. So if like other companies, sometimes banks may have to liquidate. But in Sri Lanka, normally, generally, there is very rare circumstances which warranted the liquidation of a bank. I think the very recent past, there's nothing. But in I think in 2003 or somewhere, we had a sort of bank failure, or the regulator closed down the bank. Actually, not bank failure, regulator closed down the bank. So under that circumstances, this liquidate get affected. So these are the provision. So the director bank supervision, DBS, director of bank supervision, will be the liquidator in case the licensed bank going for a liquidation or winding up. No voluntary liquidation without the approval of the monetary board. Without the approval of the monetary board, they can't go for a voluntary winding up of a bank. Where monetary board authorities, the bank should, monetary board authorizes the bank should immediately cease to carry on the business, exercising only powers for the orderly liquidation, and repay some of the money due to depositors and other creditors, wind up all operations undertaken prior to such authorization. So in that case, monetary board, with a monetary board approval only, they can go for a voluntary winding up. But even that circumstances, monetary board will ask the bank to do certain things. So compulsory liquidation, monetary board may revoke the license and proceed for compulsory liquidation where monetary board is the opinion that where assets of the bank that it has approved voluntary liquidation is not sufficient for fully discharge of its obligations. The completion of voluntary liquidation is unduly delayed. So in that circumstances, monetary board asks the bank to go for a compulsory liquidation. The director of bank supervision will vested the full and exclusive powers for the management and control of the affairs of the bank for the compulsory liquidation. This is important even for your general knowledge or any other things. You can just keep it in mind. The priority of the claim when a bank get failed or bank going for a winding up. So who will get the priority to get their money? So first one is necessary and reasonable expenditure incurred by the liquidator in the winding up procedure. First, they have to take the liquidation expenditure. Wages and salaries of the officers and employees of the bank for the immediately preceding 3 months of the commencement of the winding up. Taxes, rates, and deposit owed to the state and local authorities, fees and assessment due to the central bank, and after that, start from the depositors. The fund deposited in the bank with the interest accrued up to maximum 20,000 for any account. This is other than the deposit insurance. I think you all may heard about the deposit insurance, which we will discuss in later part of this slides series. And so this is other than the deposit insurance. First, they will the depositors are entitled to first receive the 20,000 and other deposit with interest if any. So here depositors will get the first preference, priority. Okay. Any questions? Okay. The cancellation of the license by the Monetary Board. Failure to commence the business within 9 months of the issue of the license. For example, if a Monetary Board issue the license, but the particular bank failed to commence its business within 9 months period, then the particular bank license will be cancelled. Failure to pay any debt incurred on it becoming due. So any debt becoming due, but the bank would not able to pay, then the license may be cancelled. A petition or an action for the relief filed against the bank and has appointed liquidator, custodian, and receiver. Ceased to carry the out banking business where it is a licensed commercial bank incorporated outside Sri Lanka, had its license or authority to operate cancelled or withdrawn by the appropriate authority or regulator body of the country in which such bank was incorporated. Here this is circumstances something different. For example, they are saying that if it's a licensed commercial bank which is incorporated outside Sri Lanka, it means foreign bank branches which are operating as a banking here. But if they are regulators in the sense, even when they are operating in Sri Lanka, Central Bank of Sri Lanka becomes the regulator. But for example, if it is an Indian bank, if a bank incorporated in India, then their original regulator will be, or home country regulator will be the Reserve Bank of India. So in that circumstances, if the Reserve Bank of India cancel the license of the particular bank, then that particular bank's, the Sri Lankan operation also will, the Central Bank of Sri Lanka will cancel the license. Okay, that's what, where it is an LCB incorporated outside Sri Lanka, had its license or authority to operate cancelled or withdrawn by the appropriate authority or regulatory body of the country in which such bank was incorporated, then that circumstances, Monetary Board of the Central Bank of Sri Lanka also will cancel the license. Subsequent actions on cancellation. Okay, there are some subsequent actions after the cancellation. Monetary Board may give the notice to the company of the cancellation and shall communicate the same to the people. And within 30 days, the company can tender objection why license should not be cancelled. So first they issue the notification of cancellation. Then the company has the right within 30 days, the company has the right to tender the objections and say challenging the cancellation. Any person aggressive by the license cancellation decision of the Monetary Board may appeal to the Court of Appeal within 14 days of him being informed by the Monetary Board of such cancellation. Okay, within 14 days, any person who is against that particular cancellation, he can or who can file the case. Court of Appeal. The Court of Appeal may, on the appeal made to it, confirm or revise or modify or set aside the decision against which appeal is made and make any other order as the interest of the justice may require. Okay, so these are some subsequent actions on cancellation. And after expiration expiry of 60 days from the issue of cancellation notice or after considering the objection, Monetary Board may withdraw the notice or cancellation the license and notify the bank. So, if the Monetary Board think that that after expiry of the 60 days from the issue of the cancellation notice or after considering the objections, Monetary Board may withdraw the notice or cancel the license and notify the bank. So they can go for a two decision. One is withdraw the cancellation notice or cancel the license. The cancellation of the license will take effect where there is no appeal after the period of preferring such appeal has expired, where there is appeal against the cancellation and cancellation is upheld by the Court of Appeal. The decision to cancel the license will be published in the Gazette. So once the bank's license has been cancelled, the decision will be published in the Gazette to inform to the general public. So winding up of a licensed finance company. So these are about the cancellation of license of a bank. Okay, licensed bank. If you have any questions, you can ask. Or otherwise, I'll just move to the winding up of a company. Because considering the time, I just if you have any questions, I can. Okay, similar to the liquidation of a bank or cancellation of the bank license, there is a separate procedure for winding up of a licensed finance company. These days, or not these days, I think 1 or 2 years before, it was very common, and 2-3 finance companies' license were cancelled by the Monetary Board due to their inability or due to their financial conditions. So you all may heard about that. It is not sort of ethical to mention the name here for you all, but you all may know what are those companies. So winding up of licensed companies, the director non-bank supervision will make the application to the court when such order is made by the Monetary Board. So when Monetary Board decide and make the order for the cancellation of license, then they can director non-bank supervision make the application to the court for winding up. The court will order the winding up and provision of the Company Act relating to the winding up subject to the supervision of the court shall apply. If the court is of the opinion that company is not insolvent, it may make order permitting to resume the business. If the court decided the company is insolvent, company is not an insolvent company, then the court can say that to resume the business. The director or any person authorized by the Monetary Board shall be the liquidator. Here, where in the bank, it is clearly mentioned that director bank supervision will be the liquidator. But here, of course, the director of non-bank supervision or any other person authorized by the Monetary Board shall be the liquidator. Any cost, change, etc., charges, etc., may be paid by the central bank in the public interest where they cannot be met out of the company's fund. If the company cannot make any cost or charges, then central bank may meet that charges in the interest of public. Priority of the claim, again, minister may make the regulation. So the minister in charge to finance make the regulations about the priority of the claim. Until the regulations are made, provision of the Companies Act and any applicable law to the extent not consistent with the Finance Business Act shall apply. So, but in the Company Act, it clearly says that priority of the claim, and here, of course, minister can make the regulation. Cancellation of the license by the Monetary Board. The failure to commence the business within 9 months of the issue of the license, then the Monetary Board will cancel the license. Failure to pay any debt incurred or on it becoming due. For example, if a finance company could not pay the debt incurred or becoming due, then in that circumstances, Monetary Board can issue the cancellation of license. A petition or any action for relief filed against the LFCs and has appointed liquidator, custodian or receiver. Cease to carry on out the business with the cancellation of license of the issued by the Monetary Board. Continuously violating the provision of the Finance Business Act or any other directions rule issued and they are under, then Monetary Board can issue the license. Actually, under the Business Finance Act, licensed finance company has to follow the several conditions. So even some direction issued under this Business Finance Act, the companies has to, licensed finance companies has to follow those things. If they are continuously violating under that circumstances, even Monetary Board can issue the cancellation. Failure to pay the annual license fee or carry on the business in a manner likely to determine to the interest of its depositors or other creditors, then they can cancel the license. So here again, subsequent action on cancellation. Monetary Board may give the notice to company of the cancellation. Within 30 days of the company can tender the objection why license should not be cancelled. After expire 30 days from the issue of cancellation notice or after the considering the objection, Monetary Board may withdraw the notice or cancel the license. This is similar to the banking procedure. So Monetary Board has to issue the cancellation notice. Then within 30 days, they can submit the objections, and after the 60 expiry of the 60 days from the cancellation notice, they make Monetary Board can withdraw the cancellation by considering it or cancel the license. A decision to cancel the license will be published in the Gazette and at least in the daily circulated newspaper in 3 languages to inform the general public such company is no longer authorized to carry on finance business. Board will require the company or direct a bank supervision to proceed with the winding up of a company. So these are the subsequent to the subsequent actions on the cancellation. Okay, so we have discussed about the cancellation of license, liquidation of bank and liquidation of finance companies. If you will have any question, you can ask. Any questions? Oh, I have a small sections about the deposit insurance. Before going to that, if you have anything, you can ask about the winding up for the bank or finance companies. Okay, if you all don't have the questions, I'll just move into the deposit insurance. These days, you may have heard about this deposit insurance and its repayment to the depositors, particularly repaying the money to the finance companies or cancel the finance companies which license was cancelled by the Monetary Board. Then they are this deposit the compensation are paid by the deposit insurance. Okay, so the deposit insurance established under the deposit insurance scheme regulations number 1 of 2010. So in 2010, I think in September they have established this deposit insurance by publishing a Gazette notification. They have started. and subsequently name has been changed as a deposit insurance and liquidity support facilities. Initially, it was started as a deposit insurance scheme, and then the name has been changed. These are just for knowledge for you all. I think there won't be much questions on this, but you can get the knowledge. And deposit insurance scheme was initially set up under the Bank Supervision Department. Then it has been transferred to the separate department called Resolution and Enforcement Department. In Central Bank, we call this as a RED. So Resolution and Enforcement Department are now managing the deposit and insurance scheme. The objective is preserve public confidence of the financial system by ensuring safety of all small deposits. The purpose of you all may heard about, because the purpose of deposit insurance is because generally when the depositors are making a deposit with the banks and financial institution, they have to check the condition of the particular financial condition of the particular banks and financial institution. But generally, we can't expect this from the small investors, because small investors are generally comparably have a little knowledge about the financial literacy. So to safeguard those small investors, and by ensuring the safety of the small investors, to increase the financial system, the confidence of the financial system, the Central Bank of Sri Lanka introduced this deposit insurance. Actually, after this global financial crisis only, deposit insurance getting more popularized. There is a deposit insurance mandatory membership. These members are licensed commercial bank and licensed specialized bank, and licensed finance companies has to contribute for a deposit insurance. So if it is the licensed commercial bank, if it is a bank which capital adequacy ratio is more than 14%, they have to contribute 0.1% of their eligible deposit as a premium to the deposit insurance. If it is a licensed finance companies, they have to pay 0.15% as a premium, has to be paid premium on monthly basis. The penalty will be levied if the premium payment are delayed or shortfall. Total fund as at 31st March, December 2019, 74 members and a fund approximately 65 billion. But now it's again around the 65, because there is no much increase because the fund made several repayments. Investment, they can make the investment in the government securities and in secure advances loan to any, they can either run the loans to any member institution which face the liquidity issue with the security. So repayment of compensation paid in the event license of a member institution is suspended or cancelled by the monetary board, and deposit insurance will be compensated maximum of 1.1 million. Actually, the students, please correct this amount. This is the old amount. I couldn't correct this in the slides. The deposit insurance maximum amount now 1.1 million. There may be questions in the question 1. So what is the maximum deposit insurance amount? So you all may have to answer. This is, it is not the 600,000. It is now 1.1 million. Recently it has been enhanced. The compensation will be paid within 6 months from the date of submission. And compensation payment, these are some amount of the earlier compensation payments. I think it's not that much relevant to you all. So this is all about the Sri Lanka deposit insurance. So with this, I think I'm successfully completed the coverage which I thought to complete today itself. So this is all about. So This is all about the first section of our topic or our subject. The first topic talking about the incorporation of a company, licensing process of the company, and winding up of a company, and winding up of a financial institution, especially banks and finance companies. So, and later part we have discussed about the deposit insurance and liquidity support scheme as well. We have, that is for just get some knowledge, but there may be some one or two questions, but there may be questions in the question mark. Having that, if you all have any questions, I'm ready to answer the things. There's a question that yes, actually there's two questions. The first one is the deposit insurance scheme amounts changed recently. Question, yeah, of course, the slides you have to change it. It is now 1.1 million, not 600,000. 600,000 is somewhat early amount. In recently, I think beginning of this year, I think the amount has been changed. So please make the change in the slides. It's now 1.1 million, the maximum. Actually, you may heard about that, how this the payment is calculated. Actually, the per person per institution. For example, if two institutions fail, if one person has the deposits with the both institution less than 1.1 million, then he is eligible to get total deposit from both institutions, failed institution, because in each institution per depositor. For example, if in the circumstances, if a joint account holder, they are having 2.2 million as a deposit. In that circumstances, they are eligible to get ND amount. As a student, you may have to have this knowledge, and you can pass this knowledge to general public. Most of the people doesn't aware that. So the per person per institution, if it is a joint account, the people can go up to 2.2 million for the compensation. If it is a single account, if it is a single person account, then altogether there he may have the saving account, he may have the FT, altogether FT, 3 FTs. So what they will do is they will amalgamate all the balances and check with the maximum gap of 1.1 million and make the payment compensation up to 1.1 million. For example, he has the 500,000 one deposit, other 600,000 in other deposit, and saving account he has 100,000. So in that case, 500, 600 and 100, then altogether 1.2 million. So the maximum amount is 1 million. So in that case, he is eligible to pay 1.1 million as a compensation. So so when people are making the financial decision on deposit, they have to consider this limit as well and take the financial decision accordingly. Then that will safeguard the people interest. Oh, otherwise, if you check the health of the financial condition of the banks and financial institution, of course, there is no issue. But when the people are dealing with the weak finance institution, then they have to consider these safety measures as well for the decision making. Okay. And there's other question that, sir, will the exam postpone? Of course, that is, I don't know that whether they will postpone the exam or not. That is, you have to ask from the IBSL people, examination division. They are responsible for these exams. If you have any questions, I can answer. Otherwise, I'll just wind up the class. So next class, most probably, I will start the risk management section, which is sort of, for the exam point of view, risk management is important because there's a definitely there will be a definitely, in the sense, most of the exam paper, there will be a 20 marks question for under this risk management. So you can secure this 20 marks by studying the risk management section properly. Okay, so I'm going to start the risk management section in the next class. It means coming Saturday. Okay, since you don't have any other questions, I'll stop the class. Thank you so much.